Is there anything that can break this market? Moody's downgraded the US's credit rating. Markets were green. China-US trade talks showing some turbulence. Markets are green. The CEO of Nvidia telling the market he lost $15 billion from Trump's export controls in revenue. Market is green. Massive new spending bill looking to further increase the deficit. The market is green. If somebody could please give me the bear case for the S&P 500 in the comments, that would be much appreciated. But we've got a lot to talk about. Let's roll the tape. Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks attempted to claw back steep losses on Monday as Wall Street shrugged off Moody's downgrade of the US credit rating and investors digested developments in President Trump's tariff policy, as well as some developments in Russia and Ukraine. And today was just a flat day, a lot of gray on the charts, some green as well, some red. Such goes the market. And that's because today was really a tug of war. We had some really bad news from the weekend and then really good news intraday, and that really balanced the entire market out. The S&P 500 was kind of flat today, with the worst performing sector sort of being the energy sector right here. Broadly, that was red. But if you look at most other sectors, it was kind of flat lying. Markets trying to find their footing. We saw stuff like Nvidia gain ever so slightly. Apple was down 1%. Next price action here in hardware. Very similar situation in software. Google and Meta were kind of flat here today. Microsoft held it up for technology, up 1% here on the day. And that was on some news that Microsoft Azure will be implementing some features from Elon Musk's XAI. But all in all, a very flat day. The sector chart sort of looks as if we had a kind of green day with all but 3 sectors in the green, but largely the S&P 500 was kind of flat, slightly up. And then we actually saw the biggest sectors right here, the XLK, the XLY, and the XLE were down marginally today, with the XLE being the worst performer. But you can see the XLY down 0.23%, the XLK down 0.12% when all the other sectors gained. Healthcare up 1% here on the back of what's happening with United Health, sort of seeing like a dead cat bounce after a 50% pullback from the highs in the last month. Utilities gained, industrials gained, materials gained, staples gained. There were defensive cyclicals at the top, mostly higher growth here at the bottom. Very mixed day net. We were flat. The real outperformer coming from gold, gaining 1.29%. The factor and size segments were largely mixed, except for small caps, which was in the red marginally, but then we had mixed price action everywhere else. Mid cap growth gained, but core and value fell. And then large caps, core and value gained, and then large cap growth actually fell. Very bifurcated day, mixed day. There was no real discernible trend, really just the market finding its footing after we got that US downgrade from Moody's after the close on Friday. Moody's cut the US government's long-term credit rating from AAA to AA late Friday, citing escalating deficits and an increasing burden of refinancing US debt amid elevated interest rates. And this was really the biggest news of the weekend, but there were some smaller tidbits that were really pulling the market into the positive. One of them was actually Trump's tax and spending bill. This bill is officially out of committee and will be advancing to the House floor, so they got a bill done. And this looks like it's moving along nicely. It should get past the House. It should get past the Senate, and then we'll go from there. But still, this is a record amount of spending, and it certainly doesn't help that Moody's downgraded the US credit rating on the eve of this. Now, other breaking news, China actually accused the US of breaking their Geneva trade agreement on recent chip export controls, and they urged the US to rectify their missteps. I came out on Twitter and said this is looking like Trade War 2.0, but we'll see how they rectify this. I didn't see any response from the Trump admin regarding this, so maybe they're talking to China behind closed doors. Another big part of market moving news on the weekend, Trump came out and said that Walmart should stop trying to blame tariffs as the reason for raising prices throughout the chain. Walmart made billions of dollars last year, far more than expected. Between Walmart and China, they should eat the tariffs and not charge value customers anything. I'll be watching, and so will your customers. Now, this is very interesting, guys. Walmart operates on a 1.5% margin. They did about $14 billion in free cash flow last year. If Walmart take a $1.5 billion tariff hit, that is 10% to free cash flow, and the stock has to re-rate accordingly. To say Walmart should, quote, eat the tariffs is very, very irresponsible, and Walmart will definitely take a bigger hit than $1.5 billion because they do $600 billion in revenue for the year. So if Walmart is to eat the tariffs, we may actually see this business be negative on a net income basis. And I don't think anybody wants to see that. Also, Walmart's trading at 32 times earnings. So this is a major overhang on the stock as it is right now. Just something interesting I thought I'd add right there. Now, something else that was moving the market was a ceasefire between Russia and Ukraine. This was very, very interesting news. Now, Trump and Putin held a phone call. Trump described the phone call as excellent. And the primary objective was sort of to get discussions underway for a ceasefire. Those discussions are to start immediately. And I think Trump is probably going to make a trip probably into Switzerland with Zelensky and Putin there to discuss a potential ceasefire. I think this is definitely on the cards, and I think we're probably going to get a ceasefire signed within the last month, and that is going to weigh on gold as a whole. But now Nvidia was flat here on the day, clawing back some very, very steep losses. Now Jensen Huang came out and said that the China chip ban cost the company $15 billion in sales. He called the ban enormously costly, deeply painful, and said the US government missed out on $3 billion worth of tax revenue. That being said, despite his comments, Nvidia was kind of flat here on the day. Very, very interesting, holding that $130 level. Coinbase is officially in the S&P 500, cementing the milestone for the company and the crypto industry. And Tesla, one of the worst performers here today, down 2.35%. Other news from China that Xiaomi will officially unveil its YU7 this week, a mid-size crossover EV that will go head-to-head with the Tesla Model Y. And then for everything we saw today, we had 2,900 advances, 3,200 decliners. We saw net inflows in the New York Stock Exchange, outflows in the NASDAQ 100, with the S&P 500 finishing flat here today. And market momentum continues to remain as it was on Friday, with the 5-day, 20-day, 50-day moving average above the 50% mark. But the 5-day declining today, very interesting. And we still haven't retaken the 50% mark here in the 100, 150, and 200-day moving averages. Now, guys, diving into the charts, you can see the S&P 500, the NASDAQ 100 was flat, slightly green. So too was the RSP, slightly red, but pretty much flat here on the day. And then the worst performing sectors were sort of like the mid-cap, the S&P 600, the IWM, but they were down 0.3, 0.4, 0.5%. Nothing major in the grand scheme of the US getting a credit downgrade. And we're looking a little bit red here in the after hours. Europe was green. China was green ever so slightly. It was really just a flat day for equities in aggregate. Volatility did tick up. So to see this massive tick up in volatility, and despite a green S&P 500, stocks up, VIX up, that often tells you that a VIX crush is coming. So we'll see how that pans out. The 2-year yield fell, and the 10-year yield and 30-year yield were actually flat on the day despite the downgrade. Very, very interesting. Listen, these prices are indexed from Friday's trade. Remember that. So flat on the day. Really, really interesting trade. Maybe this is telling us this is the top end of the range here for the US 10-year, and then we're likely going lower. The dollar fell 0.61%, and then as a result, you saw the TLT and bonds as a whole fell, or they were flat ever so slightly. Bitcoin pretty much near all-time highs at the 105,000 level, or a couple of percentage points away from all-time highs. Gold gained despite the peace talks from Ukraine and Russia and advancements on the Iran talks. Silver gained as well. WTI gained too. Very, very interesting day. If we zoom into the S&P 500, you can see we sort of got like a bullish engulfing candle right here. If we go to the 1-day chart, right, you can actually see this very, very clearly. We had a massive gap down from Friday's close after the credit downgrade, but we paired all of those losses and then some, finishing green on the day. But at one point, we were up nearly 0.2, 0.3% in the S&P 500. Very, very interesting. We moved right to the top end of that call wall. We could see right there, but we finished the day right there. And so we have to follow the trade. And oftentimes when we get to the top end of the call wall right here and that the options market doesn't move up, that often means that we do see a little bit of downside. Now, we did actually see that downside early on in the day. We'll see if we get more into the end of the week, but I am still of the opinion that the options market hasn't moved the call wall up. So we want to see a little bit of resistance here at the 59.60 level. If we do get a pullback, the very first zone you guys should be looking at is the 57.80. If we get a pullback to 57.80 and we find support right here and then make our move to the upside, that would be very, very bullish. The reason why this is such a bullish zone right here is because we gapped up and used it as the go zone to get to where we are right now. We also used it as resistance right here after the Liberation Day sell-off. We used it as support right here to bank in these lows after the initial 10% drawdown to kick off the year. And then if we continue to zoom out, you can see that we used it as resistance multiple times right here and right here in 2024. Now, guys, you can also see here that the RSI is at the top end of the range. So if we are to just maybe reset this, we would expect a little bit of a pullback. That being said, do pay attention that if we do zoom out right, and you can see in periods right here where we do get into overbought territory and stay there, stocks generally just tend to grind higher. So being overbought is not necessarily a bad thing in the medium term, but it can be a near-term sign that things can be a little bit frothy and we are looking for a little bit of a pullback. That being said, I think stocks look very constructive, and any dips to the 57.80 area want to be bought ferociously. Same for the NASDAQ 100, but that level is 20,580. It's the exact same trade plan like the S&P 500. And to be honest, it's sort of the same thing with the RTY as well. If we get a pullback to this 2013 level, buy those dips. Equities look very constructive, all things considered. There's a lot of moving parts and a lot of positive developments that's going to take equities higher, particularly that tax and spending bill. I think that's a really, really underpriced piece of legislation that's really going to boost equities, particularly with the spending. We could see a little bit of inflation coming into that, and with the fact that the Fed still has rate cuts on the horizon. Let's quickly look at European stocks just to see where we are. We are so close to all-time highs here in European stocks. If we actually take a measured move from the peak to where we closed, you're about 2% away. This turned it out to be quite the V-shaped recovery, as you can see. Very, very strong momentum. And I still think European stocks are looking very, very cheap. They're trading at about 12, 13 times forward earnings. Not a bad place to diversify your portfolio. If you guys are looking for some European stocks, I think a great one is CDLR. This is a name that I think should perform very, very well. And I think you can easily see all-time highs before the end of the year, particularly if their capital expenditure plans pay out the way the market expects it to. Now, let's dive into gold. Gold was up 0.91% today, guys. Now, we had two levels of support here for gold. We said that if we hold the support, we probably will make a move higher, despite actually breaking these lows right here. However, if we break below this 31.38 level, we are going to the 3,000 level or the 29.83 level right there. And that's actually what's happening. Not this level, but this right here. We are holding the support level. We did have a tiny bit of price discovery, but the bears came in, bought the dip, and it does look like we are holding this level. However, if we do get further Iran talks, further Russia peace talks, further Israel peace talks, that is going to weigh on gold materially. I personally like Bitcoin better, and Bitcoin is tracking global M2 money supply as expected. Do expect us to continue to go and hit close to the 140,000 level, especially if we go ahead and retake the all-time highs near the 107,000. Bitcoin currently trades at 105,000. And let's quickly look at the 10-year yield. It does look like we are sort of finding resistance here at this 4.5% level. Guys, if this continues to move lower, it does look like TLT will probably be the play for us to move higher. TLT forming a triple bottom, a very, very strong candle right here. I actually wouldn't be opposed to maybe selling like some cash secured puts at the $85 level for TLT, maybe sell them a month out looking for maybe the $90 area. And if you get a sign, it's TLT, it's bonds anyway. You can just collect the yield and go from there. The dollar, let's quickly look at the dollar. Yes, finding support here at this 98, 99, $100 level. I do forecast the dollar will drift ever so slightly higher. Not without some volatility. I do see the 104 area around about the October range. That's what I think will happen with the dollar. And then guys, stocks that I really do like, individual names. I think Target, they report earnings. Wait for their earnings. If their earnings are really, really good, right? And you maybe see a gap up, maybe see a solid close in the next day. I'm talking about the regular trading hours. Get in, and I think this will be a very, very great defensive name to hold in your portfolio. Now guys, let's dive into sentiment, and we are still sitting here at the greed zone. As you can see, inside greed, closer to extreme greed. However, expect this to change throughout the week, especially if the price action we saw today certainly continues. And guys, despite sentiment being in greed and we've had a very, very strong rally off the lows, some of the big names on Wall Street and the big funds are calling for a major pullback. Some even believe we are going to retest the April Liberation Day lows. Paul Tudor Jones said the market will hit new lows. Steve Cohen said the market could test its April lows. Katie Stockton, the market could see a new low. Michael Burry, short Nvidia, and he sold everything that wasn't a quote. That's what he did. And then Steve Weiss said, we're going lower. So Wall Street is positioning very, very bearish. They believe we're going to see the lows. If we look at the technicals, we are in greed territory. However, we are at a now or never scenario. Normally, if we get a bear market rally, it lasts about 44 days on average. That is where we are right now. And the average rally is about 14% from those lows. So if the price action we saw today continues into the rest of the week and we start to see maybe a 4 to 5% pullback, that's when we could start to say maybe this is a bear market rally, and then we have to reassess our options. But when that comes, we'll get there. In the year and now, things looking really, really good. An update on S&P 500 earnings. We're still sitting at 14.3% earnings growth, 76% of companies reporting above the analyst expectation. Looking at earnings growth into 2025, you could see the Mag 7 looking for 17% growth, the S&P 500X, the Mag 7 looking for 9% growth. So despite the tariff headwinds, still looking for pretty much double-digit growth in the S&P 500. And if we look at the revisions from the start of the year, the Magnificent 7 has pretty much seen 0 revisions. We saw a little bit of a dip and a recover. However, the S&P 500 and the 493 in aggregate have taken it on the chin. We've seen about a 3% revision and a 4% revision respectively. However, this could get worse if the macro doesn't hold up. Now, Q2 real GDP is looking for about 2.4%, looking very, very strong, at least according to the Atlanta Fed GDP Now estimate. However, something that's very, very concerning is federal employment tax receipts, guys. Now, for the better part of the last month, the soft data, stuff like surveys, has come in very, very soft, whereas the hard data, stuff like the Fed GDP Now, has remained roughly in line and fairly robust. However, the hard data is about to show the April tariff hit. You can see that federal employment tax receipts is printing negative 2.1% here for the month of May. Now, the question is, will Wall Street look through this with trade talks in motion, or are we about to see an unwind and potentially this rally we've seen could be a bear market rally? If Wall Street looks through these figures on towards trade deals, the market should be okay. However, if not, lows are certainly back on the table. Talking about data and data that we should pay attention to this week, it all kicks off on Thursday. There's not much tomorrow. There's not much here on Wednesday. But on Thursday, we get initial jobless claims, and then very, very important, we get the May PMI data, manufacturing and services, and then we also get April's existing home sales, month-over-month, year-over-year figures, and then on Friday, we get new home sales, month-over-month, year-over-year figures. In terms of earnings, tomorrow we have Home Depot. That's the biggest name that's reporting tomorrow and reporting this week. I don't see anything else major before the open. Then after the close, we have Palo Alto, Toll Brothers. Those are the two big names reporting earnings. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.